Welcome to today's video. We're diving into the fascinating world of investments, comparing stocks and cryptocurrencies. Both asset classes have their unique strengths and weaknesses, and both offer exciting opportunities depending on your goals and risk tolerance. Let's get started. Let's begin with stocks, a proven and stable asset class. Historically, stock markets like the DAX and the S&P 500 have delivered average annual returns of 7 to 10%. For example, the DAX reached 16,751 points by the end of 2023, a strong indicator of growth. Many companies pay regular dividends, providing investors with a steady source of passive income. Blue-chip companies like Apple or Siemens offer attractive dividend yields. The stock market offers access to various sectors, from technology to consumer goods to renewable energy. Stocks are highly regulated, reducing fraud risks and protecting investors. However, stocks also come with drawbacks. Economic uncertainty or geopolitical tensions can lead to short-term price fluctuations. Stocks are generally suited for long-term horizons, offering less flexibility for short-term needs. Overall, stocks are ideal for investors seeking stability and steady growth, particularly with a long-term focus. Now let's talk about cryptocurrencies, one of the most exciting and volatile markets. Bitcoin, for example, rose from around 6,000 euros in 2019 to over 75,000 by November 2024. These are massive gains for those who invested at the right time. Cryptocurrencies drive technological advancements like blockchain, decentralized finance, and smart contracts. Unlike stocks, cryptocurrencies operate independently of banks and governments, offering greater autonomy for investors. Cryptos can be traded anytime, anywhere without being restricted by stock market hours, but beware. A single tweet or regulatory announcement can drastically affect prices. Losses of 50% or more within days are not uncommon. Cryptos often rely purely on supply and demand, with no underlying economic value. While countries like El Salvador have adopted Bitcoin as legal tender, others like the US and the EU are tightening regulations. The crypto market is prone to hacks, rug pulls, and other scams. Who should invest in cryptocurrencies? They are best for risk-tolerant investors who understand the potential of new technologies and can handle significant price swings. Let's compare the two asset classes side by side. Aspect return potential stocks moderate, around 7 to 10% annually. Crypto high, potentially 50% or more, but very risky. Aspect volatility stocks low to moderate. Crypto very high. Aspect regulation stocks highly regulated with investor protection. Crypto, minimal to no regulation. Aspect liquidity stocks, good but limited to market hours. Crypto very high with 24/7 trading. Aspect investment horizon stocks, long-term. Crypto short to medium-term, often speculative. Aspect passive income stocks, dividends. Crypto rare except via staking. The choice between stocks and crypto depends heavily on your investment goals and risk tolerance. Are you looking for stable long-term returns, or are you willing to take on higher risks for the possibility of higher rewards? What about a mixed strategy? 80% stocks, 20% crypto. For conservative investors seeking long-term stability while tapping into crypto's dynamism. 50% stocks, 50% crypto, for risk-tolerant investors wanting exposure to both markets. The key is to regularly rebalance your portfolio and maintain clear risk management practices. And that's our comparison of stocks and cryptocurrencies. Both have their pros and cons, but with the right strategy, you can harness the best of both worlds. Let us know in the comments which asset class you prefer and why. Don't forget to subscribe to our channel for more tips and analysis. See you next time, and happy investing.